So I like to do the calculations on a building if I'm going to acquire it to see, first of all, if the numbers will work if I put no money down. For example, I give you an example on a building I bought. This building had 2 tenants downstairs and a residential space upstairs. And the entrance is right in the middle and you go up. And I calculated how much they were paying in rent because I called the broker. It was actually, believe it or not, it was for rent upstairs. The sign says for rent as is. So I called the broker and said, I don't want to rent, I want to buy the building. She said, well, I'll have to ask the owner because he told me he wanted to rent. He actually just bought the building. I said, well, I have done some calculations and I think the rent downstairs is a certain number. Can you tell me? And she said, oh, they're paying like 3,000 on each side. Well, that was way below market in that area. That had to be at least 4,000 each side. And I said, well, isn't the market a little higher? She said, yes, it's much higher, but these tenants have been there forever. I said, well, I'm interested in buying the building. And how much do you think upstairs? She said, it needs remodeling for at least 100,000. You can make it an office, you can make it residential, etc., etc. So I did the numbers. If I bought nothing down and this thing rents for 4,000 and 4,000, that's 8,000. And upstairs, it will probably bring about 4,000 upstairs as residential. This is quite a few years back. So it will bring 12,000 a month. So I figured the calculation would be, if I can get it at $1.2 million total cost, meaning I purchased, let's say, at $1.05 million, I have 100,000 rehab upstairs and 50,000 cushion when I change tenants, if I have to pay commission, if I have to fix something, etc. I figured if I pay $1 million, I'll be good. If I'm buying it no money down at $1 million and my total cost, let's say I get a credit line or I get somehow a second loan to do some rehab, my total cost, no money from my pockets, is $1.2 million, I can make a payment of 12,000 a month. Now, there is no positive cash flow there, but it pays for itself. And what happens when you have an asset and it pays for itself? Eventually, as the tenants pay it down, you're building equity, and as the market continues, it increases in value. And then you have rent increases, you have tenants leaving, you raise, because markets, if you're in the right market, it will keep improving. So that's the calculation I mean when I say no money down. Now, by the way, I bought that building. We ended up negotiating that I buy it when he evicts the tenants. And what we did is we bought it at $915,000. And I can show you the building, actually. I still own it. This is from 2004, March 2004, when I closed on that building. Let me see if I can bring it to you here. I've got to do this share screen, good stuff. Okay, give me a second. But what happened now through the years, the building is worth $3,650,000, you know, because when you are in the right location and in the right property or in the right investment, it compounds on itself. I'll talk later about compounding. There is a question about compounding. But that's how you build wealth over time. That's how time becomes your friend. So let me see if I can share screen here. Share screen. This is my portfolio, for example, that I held in Puerto Rico. Your goal is to hold some properties and to buy, fix, and sell some other properties, so that combination can make it. So this was actually, as you see here, 2004 when I bought it. You could see it actually, here it is listed at $3,450,000. I said $3,650,000. Sorry, it gets confusing when you have a bunch of properties. So you see, here are the two. Everybody can see the screen. Ashley, do you see that?
Yes.
Okay, so you see, now we have a tenant here. These people pay $6,500, these people pay $6,500, so the numbers are completely, this brings $12,000 a month now through Airbnb, so we're netting a good $9,000. Numbers are much better, and the area is completely desirable. The cruise ships arrive here. This is a main traffic. I own this building, 259 Tanka. I own this building, 255, 250 here. Even my sign is up here. I always put for sale, etc. I own this one here. It has a for sale sign also, and it has a nightly stay. Here we do nightly stays. The point is, a building like this, you have the stores downstairs, you have the income, and it just keeps getting better. But I did all the calculations based on a no money down. And then I put some money down because they wanted to see cash down payment. And then, but after I remodeled it and I rented it, I refinanced, cashed out all my money out. So for the past, how many years? Since 2005 to now, for the past 19 years, I've been having income on no money invested. It was what you call infinite rates of return on endless streams of income. It will just keep pumping money, keep pumping money. Periodically, you have to fix something or another, but that's okay. That's part of becoming a real estate holder.